Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty, and I'm going to be giving you a weekly market update. And the first thing I wanted to talk about is the rental market and where we are there, because this could indicate some changes coming for us. So I'm going to go ahead and share my screen here real quick and kind of talk you through this. Give me 1 second to get the correct screen I want, and there we go. That should come through here now. There we go. All right. So this should, hopefully you can see that. This should give you an idea of what I'm talking about as I go along. So looking at the rental market, and again, looking at the rental market, because this may indicate not only what's going on in the rental market, but where we may be going in the seller's market. So first of all, the Crawford Market Index, the CMI, which I talk about every week here, I'll get into more in a minute. It does continue to drop slightly. Again, nothing crazy. We're still in a seller's market. But let's take a look at the rental market and what this could mean for us. So single family home rentals have seen just a single family homes now, single family detached homes have seen a increase in the rental market of 114% from 728 to 1561. Okay. Townhomes in the rental market have seen an increase of 45% in listings. These are the number of listings increased. Okay. So the number of listings have increased 114% for single family homes, 45% for townhomes, and apartments have actually decreased by 12%. Okay. Now, the average rent has gone from 203 a square foot to 163 a square foot. That's a minus of 20%. Again, these are all averages across the board. Every neighborhood and area could be a little different, of course. Yes, but we're seeing a bit of a decrease there because of the influx in listings, and a decrease in the increase in number of listings and a decrease in number of average rent per price per square foot. So what does this all mean? We got, in the last 4 weeks, we've seen this influx of all these new listings. We've got over 10,000. If you look down on the bottom left here of all of these new rental listings coming on the market. And we've been tracking this and seeing this. So ever since this is kind of an influx of new listings since going back all the way to September 2021 before we could say there was kind of an increase in listings. So it's been a while. What does this mean? Well, this could mean that landlords may be thinking about lowering rents, or at least kind of leveling off where they were doing big increases before, kind of a leveling off. They may be thinking about selling. They may be thinking about selling. So what does that mean? If they sell, well, that could mean we could have more listings on the market for sale, right? So this is something we'll need to kind of watch and see how that goes and see where the numbers bring us there. But that could be a reason for some of the changes in the CMI, which we're going to take a look at here in a minute. So, this obviously can make a difference in our supply and demand. Now, if we look at the actual the cities I've got down here in the bottom right listed, all of these cities seen here have an increase in supply higher than the last 6 months. So they started to get an increase, except for Avondale. All of these have seen an increase in supply higher than there have been in the last 6 months, except for Avondale. Okay, that's the only one on the list. So I got a little star next to it. So now, if we go over and we look at the CMI, the Crawford Market Index, and again, if we're at a 100 on the Crawford Market Index, we're in a balanced market. And if we're at a 90 or lower, we're in a buyer's market. If we're at 110 or higher, then we're in a seller's market. Okay. So I talk about this all the time. Crawford Market Index is very, very, very good use tool to kind of tell us where the market is and where it may be heading. And we see this huge increase in supply. So let's take a look in, I'm going to share my screen again. except we're going to go with a different chart this time. All right. And we'll share that. And if I can get this over here, I can actually look at it. Okay. So we have on this Crawford market index, we have, you see the arrows going down in the middle of the page or up. The only one going up is Glendale. The other one's going down, okay, are all the rest of the other ones are all going down on the chart. That means that we've got a change in the Crawford market index. That means it's coming down. That means it's been over 110. So we're in a seller's market. We're still in a seller's market, but we've seen some pretty significant decreases over the past several weeks. For instance, Fountain Hills down 19%. Some of the other bigger ones like Peoria down another 25%. Cave Creek down another 28% this week, and Paradise Valley down another 25%. Buckeye down 19%. Okay. So as it goes down, we're still in a seller's market, nothing to get crazy about. We're still seeing multiple offers on properties, but instead of seeing maybe 20 offers, we're seeing 5 or 10 or 8, that sort of thing, right? And again, every area is a little different. We see smaller decreases in some areas. We see Glendale's actually gone up 3%. So that just kind of gives you an idea on where we are in the shifting of the numbers and some of what we're talking about today. The overall CMI, we'll look at in a second, but 435, okay, 435 equals, okay, more than 4 buyers for every, just as an example, a CMI, on a CMI index, 435 more equals more than 4 buyers for every home. Okay, for every home. So you don't let the score kind of scare you is the bottom line. Okay. It equals 4 buyers for every home. So 435 equals 4 buyers for every home. But the point is, this isn't anything to get alarmed about. It's just kind of indicating a little bit of a weakening in the market. Okay. So we may see a little shift in dollars, more sellers than buyers coming into the market. If we have that rental market coming at us slowly but surely, we may see this because of interest rates and prices going up and people wondering, should I get out? Should I not? And investors getting out of that. In order to get to a balanced market, just to kind of give you an idea, if we wanted to get to a balanced market, okay, it would take double the number of homes for sale and half the current demand, okay, half the current demand, and doubling the number of homes for sale in order to get us to a balanced market at that 100 level, okay, to get to that 100 level. That's coming straight from the Crawford market people. So there's a little indicator there. That's a great example of what it would take, kind of surmising on some of the numbers there. And this is what the Crawford market index looks like this week. Let me just grab this, bring it over here so I can see it while I'm looking at the camera. Okay. So as we could see, and this went the exact same way last year. So there's nothing in order, to be alarmed about where we see these, changes coming our way, and what's going on here currently with the darker line and how it went down last year and went back up, and how it is right now where that arrow is there, and what it's doing now. Nothing to get alarmed about. That's exactly what happened last year. It went up and then it went down, but it still stayed in the range of a seller's market. If you look over on the left, it still stayed on average in that around 350 range, 340, 350, 360 range, okay, for the CMI. Right now, we are at a market index, a CMI of 410.9 as of the 22nd. I'm using these numbers. I usually use it for Mondays. I do another little teaching on this. So I'm just kind of pulling the numbers from the 22nd. for the week. And then we've got demand at 103.8. So that demand is now, kind of, again, been dropping and kind of in that range of where we want to see it at, in that normal range of more of a balanced market on the demand side. And on the supply side, we've seen again, like I mentioned earlier, a little bit of a shift there at 25.3%. So we're still around 70% lower, 75% lower, 70% lower than, or 74% lower than where we want to be. But it's still an indicator that things may be starting to shift a little bit, and we'll probably see exactly what we saw last year, where we were up here, where we were earlier this year, up in the mid fives or low fives, and then it dropped down, into the fours, and then the mid threes, and then back up again at the beginning of the year. So going into 2023, we'll probably see it go back up again. Okay, so right now, every indication is we're kind of following the same track as last year. We don't see a huge difference in any of that, quite frankly. But where we could see a difference is with an influx of extra supply. If the landlords decide to sell, if these rent prices and if these listings continue to stay consistently increasing, or feeding the rental market, and we see that the price per square foot levels off, or maybe even goes down a little bit further, as I mentioned earlier. So guys, that's it in a nutshell. That's all I have for today. If you have any questions at all, need any clarification, want to find out more about your neighborhood, your home values, if you're looking at this by email or on social media, there should be links to check us out online, reach out to us, and also check your home value so that we can do that automated. And that's going to kind of give you a general idea. But obviously, if we're able to see more information, visit the property, or get pictures and video from you, we can do that. We can also get you cash offers on your property if you have any need for that, and it would be full market value. That would alleviate showings, that would alleviate you having full inspections. That would also, those cash offers would also include not having to worry about having an appraisal. So you kind of alleviate all that, and then we can get you even post possessions, lease backs, all those sorts of things set up through there, so that you can even stay in the home a little longer after it sells, so you're not rushed. And if you're doing a new build, we can even work with that time period as it would take to get you into that new build. So guys, if you have any questions at all, let us know. 480-788-8569. Call or text us there. Email us at home@mincolagroup.com. Check us out online at mincolagroup.com and mincolahomes.com, and on social media everywhere. We'll talk to you guys next time. Have a great weekend. Thank you.